should that take place through a budgeting process? Because the point is that if you make more money, for instance, you look at people that make, say, $200,000, you say, oh, they got plenty of money, $400,000, whatever it might be, and then they might have financial difficulties. And of course, statistics points out that when the leading causes of divorce is around money. Mm-hmm. So, what are you suggesting, that they budget or come up with a plan? Because if you're saying that you're making a lot of money and you still can't make ends meet, then what's the problem?
Let's go through the process.
Okay.
The first step in any successful financial plan is knowing what you're planning for. And when I say that to people, if you ask people what are your goals, I hear a lot of things like, oh, I want to save more money, I want to spend less. Short on specifics, rarely accompanied by a plan. You have to get really clear on what you want. I want to save $5,000 this year to help my child go to college. I want to save $8,000 to start a business. The only way you're going to find the motivation to stick to any kind of a financial plan is to have a very clear picture of what you're planning for. So that's where the process starts. But as you and I have discussed in the past, the main thing I discovered in my research for this book is that there's three things at work in all of our choices about making and spending money. The first lessons we learn about money growing up, our early role modeling. If you grew up in a house where credit card debt was acceptable, on some level you're going to think that's okay. If you grew up in a home where things like saving and investing were never discussed, you have no role modeling for that as an adult. The second factor is what I call social scripting. And I use the term scripts because I want people to really think of these things as something written by someone else. There's social pressures to keep up with the Joneses. If I don't have the same clothes and car that my neighbor has, I'm not as good as they are. There's social messages about gender. Even though a lot of women, because they're just more single women, are the heads of their households and managing money, there's still a reluctance on their part to make big financial decisions because society is simply not set up for women to do that. There's also social messages about ethnicity and race. And, for example, the social stereotype that minorities are financially illiterate, we saw a lot of predatory lenders literally take that to the bank. African Americans making over $100,000 still get worse rates and worse loans than white Americans making $35,000. So you have those early role modeling, you have the social scripts, and the third component is the way we perceive ourselves. I'll always have credit card debt. I'll never save money. People have to be aware of how these influences are playing out in their behavior, which is a methodology I create in my book. This isn't going to change. These things are in our DNA, but with a little awareness, you can have that aha moment and you can make a better choice. So it's really planning your goals, seeing what's really at work in your financial choices, and then when creating a system in which your numbers really represent what you value.
Right. John, you mentioned that subprimes are not all bad. Mm-hmm. You know, generally what we're hearing today more than anything else is that, subprime lending is terrible. And, of course, that's the reason why we have all these foreclosures. You know, how do you assess as to whether it's good or bad? I mean,
it's a great question. Look, a payday loan, I don't like payday loan lenders, but a payday loan in and of itself is not bad. If you are a middle-class worker, you don't have medical insurance, Johnny gets sick, you use your paycheck, you rent money to pay Johnny's medical care, you get a payday loan once to catch up, then fine. But if you're using a payday loan 20 times, then that's financial crack, and that's not fine. So it's the abuse of it. Is it being abused or the abuse of it? The subprime loans, in and of themselves, responsible subprime loans, have done more to lift poor people out of poverty than anything in the last 50 years. The problem is this predatory function of subprime loans, this irresponsible function of subprime loans. And I'm actually in my role as the Vice Chairman of the President's Council, and by the way, I'll serve 2 presidents between now and 2010. And this, you mentioned this subprime crisis. Well, it also, I think, created an environment where we could have this President's Council as public policy. But I'm also chairman of the Underserved Committee. The first thing we're doing is tackling the future of responsible subprime lending, to get the lenders together, the secondary market folks together, to get the regulators together, to get everybody in the same room. And is the future a 40-year mortgage with fixed rate, with no negative amortization, with a financial literacy course on the front end? Is it a 6-month life event clause? Because you pay your payments for 10 years, and you have a catastrophic event in your family, somebody dies, you lose your job, it doesn't make you a bum, it makes you human. So if you made payments for 18 months, you should get 1 month of life event. This is just my idea. So after 10 years, you have 6 months in the bank, so to speak, where if something happens, you can call your lender and not beg for mercy. You say, I have met my obligations. It's in my loan covenants. I'd like to have 6 months of payment reprieve and the payments tacked to the back end. So I think we can be creative and innovative about responsible subprime lending. It just simply means that you have a few hairs on your financial file where Joe Blow does not. It doesn't make you a bum. It makes you different. And so the loan, the subprime loan, it's subprime, like going to get a prime rib. You know, it's just subprime. It should just be a level below prime, an A minus versus an A. We've made it something different than that, and that's the abuse factor.
Right. Let me say that, you know, that, and I guess maybe one
Linda's
thing.
made it something different than that.
Right. Yeah. Well, I think the other thing I want to sort of talk about for a moment, you know, I performed a wedding, and this couple, and one owed $90,000, and the other one owed $80,000. This is just student loans,
Yeah.
you know, for the education. And, you know, and I said, wow, this is really $170,000 they're going into, and then talking to them, I found out something else. Aside from that, they had these awesome credit card loans, these bills. Mm-hmm. How do we deal with young people? Because they send them the credit cards.
Yeah, that's the next problem coming down the pike. If you're not paying your mortgage, you're not paying your car loan. If you're not paying your car loan, you're not paying your credit cards. You're not paying your credit cards, you're not paying you will pay that mortgage if you can't pay anything else. So it's going to be a slippery slope, this economic situation. I think also, Congressman, and God bless your efforts here in Congress to provide responsible and balanced legislation that protects consumers and Americans. One of the big crises that we need to avert is to make sure when this economic crisis is over, lending to the poor and the middle class does not stop. There's a real risk that by overreacting to subprime, is what I'm talking about now, that people say, okay, then no lending at all in the future. That's why I'm saying responsible subprime. Let's differentiate it. This issue of young people, the number one reason black and brown kids drop out of college is not academics, it's money. And so we're working with the White House Initiative on Historically Black Colleges and Universities. It's 105 HBCUs, and our Banking on Our Future college editions. We've educated 280,000 children in low-wealth communities, and we're going to come to your district, by the way, with your help, hopefully.
You're welcome, yes.
We taught them checking, savings, credit, investment, the history of banking, a course in dignity. And in South Africa, we teach a course in entrepreneurship. And we open a bank account for these young people at, and Stacy said, a very early age. She's one of our board members and also one of our Hope Corps volunteers. But now I think we want to go to the college. We want to go to colleges, HBCUs, and give them a primer course in financial literacy as a freshman. And I think no one should be able to graduate college without getting a certificate in financial literacy on the back end. We have got to stop making or allowing ourselves to be victims in addition to folks trying to victimize us. Financial literacy has to become the new civil rights. And this has to become the new civil rights movement.
Right, yes.
And when you look at what's happening with young people, I work a lot on financial literacy in high school students. I think the most recent numbers from Nellie Mae is that high school graduates are going to enter college of the 30% that have credit cards with $1,200 in credit card debt. And when I go out and I counsel these kids and I find out what's going on, the problem is twofold. They don't understand how credit cards work. I was recently talking to some students who thought paying the minimum balance meant you paid off your credit card. And the second is they have no idea the long-term consequences. They have no idea that now a lot of employers will look at your credit rating to determine if they're going to give you a job. What a horrible reason not to get a job that you worked to study, you know, that you've studied so hard for. All these kids have to do is understand these things. They were horrified. And that's what I was saying, financial literacy. It's great that you're seeing a lot of these programs that are teaching kids what a stock is, what a bond is, but you have to tell them how this relates to their overall environment, how this relates to their economic environment. They'll get it. But what I'm so surprised at is that they're not learning it at home. We're not setting the kind of example. Look at the average credit card debt the average family is carrying. Your kids are just doing what they're seeing you do, and they're not getting these experiences at school. And that's what, when I say the dialogue has to change, there's a lot more to finances than just dollars and cents, and that's how we have to teach our children, and we have to do it, number one, by leading by example.
So let me